The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman. This is the Tiger Technicians Hour, and we're looking at this Tuesday, the 18th, where there wasn't follow through immediately this morning. That would have been a takeoff session saying, we can go quite a bit higher before we come back to do some retesting. Instead, today we've had a sharp pullback. The Dow's down 203. The day's young. I still see buying coming in. The selling is just the kind of natural sequence that's been going on for weeks. But all of a sudden, I'm starting to see some support, and that's going to be very important. Why? Because the technicals, look at this weekly chart, the technicals, the 9-period moving average turned down 2 weeks ago, went pink, negative. The MACD deflected lower, negative. Look at the histogram still expanding. Look at the stochastic down 34%, negative. On balance volume is trying to bounce a little bit, still negative. So there's a lot of work to be done if there's going to be a rally. If you look at the monthly chart, you say, okay, big deal. Yeah, it's a pullback, sharper than usual, but 9's still way over the 14, so that's what we're looking at here. Is this going to be a bear phase that just goes to lower lows and lower highs, lower lows and lower highs, just keeps doing that for weeks and weeks and weeks? Or are we getting to a point where the market is starting to prepare and say, look, we understand what Trump's all about. I've spoken about this for decades. I've said Trump is a 51%er. What does that mean? It means that everything he does, he likes to win. Winning by 1% says, I'm a winner. That's important, but he's now tackled not 2 or 3 activities as a president in the White House. And I always say most presidents at least do 1, maybe 2 things really well, but it's really hard to do more than that. So we're going to be looking at this and saying, but it's a multitude. Everything he looks at is an issue. So that, in essence, is creating a situation that says, even if you have success, the opposing party can say, oh, yeah, but you didn't this and you didn't that. So the market is looking at this and saying, well, there are serious things. I mean, tariffs are serious stuff. I'll talk about it as we go on for the next week or so, because it's not something that in a single day you're going to be able to resolve. But what I'm saying is that the market will get used to whatever it is. But there are a lot of things to get used to here. It's not just one thing. That was my point. Okay. With that said, and that has nothing to do with whether it's an admirable venture. It's got nothing to do with that. It has to do with what the market perceives. And right now, market perceives that it's kind of shaky. One of the reasons why, only as trades, we went to 2 positions on the long side. One was a stock, and one was one of the indices. At the same time, we also grabbed another. For my subscribers, I like to have a variety of price mediums, price levels where people can say, well, most of the time, for newsletters, a lot of people like to get bargains in price. Doesn't mean to say they're real bargains, but I mean low price, single digits, maybe teens or so. And I like to activate that kind of thing. So if there's a chance that we get something that's low price in a sector that's really good, you remember I chose Bank of America rather than JP Morgan, saying I think the percentage gain in Bank of America at some point will equal, but at a lower level, the JP Morgan rally. And so far, that's kind of been good, very good. And we're still long the Bank of America. Usually by now, we're out and we're ready to get back in on a bigger pullback. So let's just watch that one. In the meantime, what we're looking at is the Dow is down 201, the S&P. So the Dow is down 0.47%, 198 points. The S&P is down 54 points at 5620, 0.97%. That's a deeper pullback. And it stopped at the pink 9-period moving average and has pulled back from that. The MACD was trying to rally. The histograms improved, but that 9-period differential it hasn't crossed positive yet, just like the 9-period moving average is way under the 14. That's going to take a lot of price movement to the upside to change. Let's go to the QQQ. I'm taking just a little time to talk about these because it's very important. We want to see if there is a divergence in the activity of the key indices. We want to see whether or not there's a sector favored, and we want to see what's working and what's not working in the sectors, and then we can go to the individual stocks. So now we're going to go to the QQQ down 8.83 at 473.95. I'm going to just take 1 second. I want to check something here before I talk about it. 934. Go to my newsletter. I just want to check. I'm almost sure that it didn't hit 59. Okay, good. So we are at this point still long, a rather aggressive small position of the QQQ. And with that said, let's go to the IWM because it made a round number low at 197.00 4 sessions ago, Thursday, I believe it was. And here we are at 203.35. Remember, on the last major move, we got 203 as our starting point. We had really nice gains on the way up, but we only took a little bit off each time. So it was a winner, but it wasn't the kind of winner because 240, it went from 203 to 20, actually went from 212 right here. This is where we got long, right there. We got long at 196.60 was the low back on August the 4th and the 5th. We got long, and we ran it all the way up. We had TNA. We had a lot of good positions there, but in the end, we waited until the very end to only take a small gain out of the core position. But we certainly had fabulous percentage gains out of small little bits on the way up and even on the way down. So now that IWM with a round number, it needs to show from the 200-period moving average that it hit exactly at 197.26. That has to be a springboard. Otherwise, a 200-period moving average of 197 becomes a magnet level in the weekly chart of the IWM. If you look at the monthly chart, remember we talked about these double tops, 244s back in November of 2021, down to 161, then back to the 244 level, fractional high on the in November of 2025, and now it's pulling back. The cup, maybe another handle. We'll see. All right, what we're looking at now is we want to go to the SMHs. So waited. A lot of people say, can you do a little bit more in-depth action discussion on the semis? Well, look, in the monthly chart, let me just move that away. Oh, I think I squeezed that. Let me just open it up a little bit. There. Okay, that's better. It made a peak T, and it's been months. Look, the peak T was in January. It was in July of last year, 2024, at 283.07, right? Now, 283.07, and it drops down to 200. That's 80 points. It's a big move down. And then it rallies to a peak A and a B, gray A and B in the monthly chart, arches over, and yet that 9-period moving average is still really strong. And the price has gone below it, but now, as we speak, it's right on the black 14-period moving average. The weekly chart has gone into this rectangle formation and is still basically in the rectangle. I'll come back because Micron has been doing very well. So there's Micron today. It is down some, down 2. Look at that, doing in a channel. I'll be back. Dow's down 213.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
C and closer observation here, G/C. So it screams up into the 150s, tumbles down within 2 months. It comes down to the 80s. Then look at those candles in the monthly chart. That looks like a biotech company. Every time it rallies, it closes at the low of the candle. But look what's happened for 3 months now. It's closed at the low, but you've got a green candle and a green candle and a green candle so far this month. And if you look at the weekly chart, excuse me, I'll have to just do that again. Let me do that. Look, rectangle. Now, rectangle, this particular pattern very often says that the resistance in the horizontal line at the top, the barrier, and the base support, at some point, the longer you go, the greater the chances are that you're going to take out the base of support and hit, in this case, 82.50. Let's call it 82s. For the 200 period moving average is trading now at 101.06. But if there is a weekly close, it's got earnings. I believe, thank you, Dan. I don't remember who said that on Thursday they're coming out with earnings. It was in the Tiger YouTube. That would be very good. Most importantly, what we're looking at is it's gone sideways. And you remember, this is the SMH's chart. SMH's semiconductor, the Van Eck semiconductor ETF also had a rectangle, but it's arching over. Everything about it is kind of pointing towards a retest of the 200 level. It's at 224 right now. At some point, it could take its time, but that's kind of rolling over somewhat. So I'm watching this. I'd like to see what Micron's earnings are. We have nothing to do with the semiconductor area at this particular point. It would have been very frustrating because of those big spikes, and then you would get taken out if you were short, and then all of a sudden it goes down. I decided we just step aside for now. Now, there are a couple of things I wanted to talk about. So I want you to go to Bitcoin to say that arching over with the A to B equals C to D. Well, it's extended down. So this just says to me we are still long. I'm thinking that we might want to take quite a bit more off over the next few days. Just keep a little bit as a core position in our IBIT. Had really good gains, taken very nice, just a little bits off at very good prices. But that peak D in the, remember in Chapman wave methodology, D is where other things can happen. Your objective is to get to a D in a buy mode and then watch out to see what happens. It could recycle higher. That's where you can have your deepest pullback. Look at this pullback from, I think it was November or December 2021. Look how you pull back from 81,000s all the way down to under 30,000, and then you rallied back up, retested successfully, made a cup and a handle. We played that handle by buying right in that handle. The IBIT ran all the way to a new all-time high. Now it's digesting these gains. And the rule of thumb with a cup and handle, my rule of thumb is that invariably the handle spikes higher. Is one of my least favorite patterns. That's why we use other patterns to confirm what we want, because the cup and handle invariably comes back into the handle. So that high that was made, the last high that was made at 82,470, we're trading right now at 81,330. We're already into the handle. All right. With that said, I just want you to check the, now we're starting to get this oversold condition just intraday because we've hit the 1020 mark right now. I'm not sure whether this is going to be, I want to see that 9-period moving average turn green in the 1 minute chart. I'm still using the June, March. I want to see it turn up nicely. That's a leg E to the downside, maybe a peak E in the 5-minute chart, and a leg D. So this is a work in progress. We haven't seen that flip positive just yet. It needs to break 56. 50. This is the E-mini March. Has to really, I would say 56.28 to 56.31. Start to actually trade there instead of just popping up and stalling. And that says, okay, maybe the low of the day is done, just like yesterday. Maybe we can start moving higher. I don't know if we'll get to positive, but that would be an ideal situation to say there's internal strength, there's a lot of weakness, and we're still waiting for the Fed speak tomorrow. All right, covered that, right? A question came in. Could I put the ES? We're at the HM. Yep, 2.5. I'll probably switch to that the next day or two. Yeah, it's the same thing. So there's the 56.71. Needs to get to 56.79 to 56.81 and actually hold there. So let me just go back to the one that I'm still working on right there. Okay. All right. Now, the couple of things we have to look at here because they are very important. The gold has gone to all-time highs. It's up 28 right now, just off the all-time high of 3,047.5 made earlier this morning. Very nice action. The GDX is now participating. But, and I mentioned this to I think I wrote it down. Then I forgot to mention it to subscribers this morning. Oh, that was so silly, because I'd spoken about this, and I believe in my market overview. So folks, I haven't been doing webinars for a little while because I spend every Friday afternoon or Saturday morning, I spend about an hour and a half giving almost like a webinar. I give an update of everything we're looking at, why we're looking at it, what we want to buy, what we're looking at, what's working, what's not working, very comprehensive. And I'm pretty sure I said that there's a point now where I'm about to see the small caps in the metals, like the silver and gold, start to pick up. That's what happens when they lag. At a certain point, they become, it's like an elastic band, and then they start to really move. And that's the phase we're in right now, which means that gold itself doesn't have to go much further than this. It could stall for a little while, take a bit of a breather, because those little guys are going to catch up. So we're looking at GDX doing well, but the GDXJ, is it the other way around? Yeah, GDXJ. Look at that. That's nice. That's also done very, very well. That's the junior gold miners. Beautiful cup formation, beautiful Chapman wave inside wedge target resistance line going right to this month where the left side, right side price time match is. That's bar symmetry. Broke out in the bar symmetry. Look at this. The exact low, the exact high in the JDXJ, the Junior VanEck Miners ETF, on the week of the 25th of October goes to 55.58. Plunges down to the 42 level. It goes to 41.85 the week of the 3rd of January. So the number of bars to the left equals exactly to the day the number of bars to the right. Oh, no, it missed it by 55.35. And that was 55.58. I'm sorry. It missed it by 25 cents, 23 cents. But this week, it more than made up. And here we are. So that bar symmetry, look, the number of bars on the left to the number of bars on the right are exactly right, exactly the same. I love that kind of action. And there's the Chapman Wave inside track, dashed green on the upside. Resistance, this is the right inside wedge, resistance target line, and it went there perfectly. Okay, leg C. I wanted to show you silver as we go to the break. SI, there's silver. There he goes. Silver had a really nice intraday move. It's in leg C, but it's pulled back a little bit from there. Our silver stock's done absolutely fabulously in just a few days. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So a question came in about Celsius Holdings, CELH. What is it doing? It's up 54 cents at 30.48. A very nice action, but this is really what we have to worry about. Or at least, I wouldn't say worry, at least concern yourself with, because it's got a very big spike, a huge gap, and then it pulls back. It's trading at 30.58. But look at this. Within it, it's starting to have another buy. In other words, that the move up was kind of emotional. The move down put it into the perspective of where it should be, and now it's trading like normal. So this is good action. This is a beverage company, manufactures, markets, and distributes Celsius Holdings. That weekly chart is where I normally would go, or like this. I just immediately draw a rectangle, a large rectangle. I say, okay, the base now is higher, so let's make it a little bit higher, and I'll make it up to there and there. So it's doing very nicely. Yes, this might be going counter to what the market is doing, so good eye, and it's at 30.54. You don't really want it to drop below 28.30. It's at 30.48 right now. Something says that this is in the sweet spot just at this moment, having tried to fill that very ugly candle from the around about the 24th of Feb. So I like this, but it's a work in progress. Why? Because until it really starts to trade in the 35 area, trying to tackle the 37 200 period moving average sometime in March or April, I'd probably say April, that monthly chart says, wow, that just got hammered 100 down to the 21 area. I mean, that's tough. So treat it as something that if you're long that you're holding, I'd have your core stop. If you were down low, I'd have that as the core. Here I'd have a trading stop on a little bit. And I would normally say I would add to it in such and such a situation. I can't really say that right now. Whatever you've got, I'm saying 31.30, 31.70. That's kind of a short-term target that you need to get to fairly quickly. Otherwise, I think you can chop around and maybe even test the 28.70 area. Hope that helps you. Next question is, I did that. Okay, question over here is, yes. So I wanted to go through a couple of things I wrote down. The TLT, and we got the Fed talk tomorrow, but I don't think the Fed has to do very much at all. They can just say, we're still monitoring. And if there is a slowdown, after all, there's a housing position. The housing, I can't remember exactly the terms today, but it said that housing came in with better than, was it in the Tiger YouTube? Whatever it is, the numbers were better than expected. That's kind of good, right? Especially in this environment. So what I'm looking at in the TLT, it hasn't shown signs yet. So I like to then draw in two patterns. One is the cup formation. TLT is the bonds, right? 20-year Treasury bond ETF. Could also have longer durations, but 20-year. 90.40 down 22 cents. If at any point in the next, going into Friday's close, there is a tag of the 91.70 200 period moving average, that would suggest that yields are coming down, and the Fed actually doesn't have to do very much at all because yields are coming down. If there's a slide below 89, that's a different kettle of fish altogether because it puts the yields into a category of, oops, is this something I need to worry about? But if it goes a little higher, the bonds go a little higher and yields come down, you can say, hey, that's fine. That's fine. Doing this Fed's job, right? So that's the TLT. Those are the numbers that I'd be watching. Next thing I'm looking at here is if there is, where did it go? Yes. So I don't think I've updated this. Let me just see. XLI. Yeah, this is the S&P Select Industrial Spider Fund. And it made an all-time high 5 months ago at 100. I forgot to type that in. Well, I did, but I had to redo that. 144.51, right? So it's gone. A to B equals C2. It's got nothing to do with Chapman wave methodology. This has to do just with the measured move that we look at in a dreaded H formation. That's the arch formation. Then you get this very strong rally. It actually looks a little bit better even than the Dow. Now, what's very interesting is that all-time high, peak A, B, C. I have to double-check this. I need to go through this again. The XLI is the S&P Select Industrial Spider Fund. But I wanted you to look at it. Let's look at it on the weekly basis, and you'll see something very interesting. Look. Dow Industrials, the NDU. Keep an eye on this. Here we go. See, there's a difference. Look at that rally for the double top at 45,054, just below the 45,073 high that was made back in December. And now what we're looking at, we've taken out the left side low, and we've closed below it. And this week so far, it's only Tuesday, so the week's barely begun. We are still under that. Now I'm going to go back to the XLI. Keep your eye on the middle chart. You see there's a difference? Lower lows and lower highs, slightly different. So this is much broader. The Dow 30, this is not the Dow 30. I don't remember. I need to find out how many components there are. Believe me, there are a lot more than 30. So I'm watching this to say, if in April, the first week or two of April, if the XLI is below 125, it's at 132 right now. These days, you could do that in a day or two. But under that is really bearish. Then I have to say, you know what, that monthly chart, there's a chance that 9-period moving average could turn down and go pink, but it'll take even more than that for it to turn pink. But it'll say that's made the weekly chart of the XLI. The Dow is slightly different. The Dow is saying to me, because of the mix of the Dow, that there's a very big difference between the mix of the industrials and the mix of the Dow. The Dow is a Dow 30. It really isn't even an industrial index anymore. I don't know why they still call it that. They should just call it the Dow 30. So with that said, what I'm watching is, and it was mentioned yesterday, yesterday or the day before, or Friday, that the KEI, that is and I had spoken about KIE, the S&P Insurance Fund has been doing very well. And I said, yeah, I've been talking about this for a while. There's a stock. Root. That's it. Look at this, Root. This is Investors Business Daily, one of their favorites. This is Root Insurance. It's called, it says super cheap insurance. Look, almost at all-time high. All-time high. Recovery, multi-year highs. All-time high was at 530.60 in October 2020. Being down to $3.31. And that's really important because if you're looking at CB, Chubb, look at this. Very nice action, almost at its all-time high. So there are sectors that are working very well. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. an amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
This is interesting. Just had a question about FRFHF is the symbol. Fairfax Financial Limited trading at 1,396.8100. Down 8.5800. Those 00s, there's a reason for that, but we won't get into it right now. This is a chart that I'm looking at. So this made a low at about 200, something like that. Let's call it 210, 220, way back in 2020. It rallies to a peak A, B, C, D, and then it pulls back. But look at this. It's walking the 9-period exponential moving average. Let me see if I can do this right now. So I'm going to go to this chart right here. And I'm going to show you something. So this is going to be, am I going to remember the symbol? FRFHF, FRFHF. Have a look at this. So this is now daily, but look at the monthly chart. If you got into this at any point when it turned green on that 9-period moving average back in March of 2021, let's go to the high of the bar. The high of the bar is 400. Let's call it 450, right? You would still be in it. It's green, and it's at 1,397 right now. So the monthly chart is spectacular. We're looking at, I'm going to go to this one. Oh, don't tell me that. No, I got it. Okay. Haven't notated this because I just got the news around the question right now. This one here is going to, you're going to make that green. Okay, take that away. And what we're looking at here is A, peak A. Remember in the chapter where you want to peak A, then you get a B, there, and then you get a B, and then you get a C, and that's an A, but that doesn't matter because you've already made a C, and then you got a C. Now the question is it going to be a peak C1, C2 that acts like a top, a double top instead of a D? Well, we'll see. So far, the 9-period moving average is doing very well. Now, I don't know if you are long reinsurance. Reinsurance. So within the context of what I always look at, that chart in the monthly chart, it's one of the most beautiful and at the same time one of the most frustrating charts you can ever get. Why? Because if you look back, you say, I could have bought this thing any hour of any day for the last 3-4 years, and I would be making money at the end of every month, just about. right now it's getting a little bit. You're at this peak D, leg D in the monthly chart, but look, the technicals are fantastic. So anyway, you could have just bought it and said, "Close my eyes, buying it. That's it. Wake me up when it when it turns down. The 9-period moving average turns pink." But so on the longer term, this is still fantastic. It's in the financial area. I got a feeling it's going to be a foreign company, Fairfax. Let me just do this for them. How much do I have time? I'll do it. Take 1 second. So Fairfax Financial Holding does. Fairfax Financial Holding. Through its subsidiaries, provides property and casualty insurance and reinsurance and investment management service in the United States, Canada, Middle East, and Asia, and internationally. So I know where is it founded in 85? It doesn't say where it's insurance company. I want you to see where it is stationed. It's got the limited. All right, whatever it is. This is a fantastic chart. The monthly chart's getting a little bit toppy just in terms of taking a digestive phase. The daily chart has already gone from a sell signal to a sell mode, but it hasn't taken out the left side low. But that's all shorter term. So what I would do is, if I was long, I would right at this very moment, I would take a tad off. One of the reasons being is the first time it's stalled for so long and made only a nominal new high. So that says to me, it could take a little bit of a breather here. Not yet worrying about the monthly. I'd keep the core position, but just take a little bit off as insurance because it's done so well. I don't know where you got it. But if you're looking at a buy, I would hold off. So I'm going to put it down here. I'll put it a little further on, maybe Thursday or Friday. FRFHF, and we'll do it again. But at this particular point, what I would say is this, on a very short-term basis at 1,397, if you look, the 9-period moving average is trying to rally and cross positive, but it's got a long way to go. MACD has a long way to go. Stochastic, this is a work in progress, and it's not showing me yet. If it does, if it goes to I'll tell you right now, if it goes to 1,422, it's at 1,397. That's going to say, hey, it's going to work its way towards the 1450 area. So I was going to say, just have a small little position. I'm still going to say, just a small little position at 1397. I'd even have a 30-point stop, just for the moment, 2%. I'd have a 30-point stop, and I would have it on a trailing basis, so that if it starts to rally, I move that stop up. Maybe I'll try to keep a core position, and then I'll move the stop up, even though it's just a small position. And then let's look at it again, because it's held beautifully. Next question came in, and I'm going to do this in a second. Yes. So are there any particular gold or silver stocks that you really like? Oh, that's a good question. So we have PHYS, which is the physical, Sprott physical gold units. It's done pretty much the same as if I had one of the things I like to look at is the IAU, which is this trades at 1/10 the price of spot, which is, trades at 1/10 the price of the GLD, which trades at 1/10 the price of the spot gold. And it's just much cheaper. It's at 50, it's at 57 right now. And the GLD, which has exactly the same chart, is at 279. We have the PHYS, which also trades in exactly the same pattern, which is at 23.44. Now, and I have to say that I was thinking of the IAU, but I thank one of my subscribers and one of the people in the den who said he had done the homework and thought that this was a much better Sprott physical gold units. We're in at 20 and it's trading at 23.5 right now. I agree. I like it. I'm quite satisfied with that. So ASA is one that we always look at. ASA Gold, this is the South African gold and precious metals. It's done beautifully. It's trading at 28.77. We haven't been in it for a while because we are in something else right now in the silver. Let me just do this right now. I'll go through it in a second. There. Okay, I'm just getting rid of that. So this is a leg C. It should still go to a D. Now, let me just talk about this for a second. I'm going to repeat myself because I talk about this every phase with gold and silver. I say it's just fascinating to me. Gold's doing nothing. Then all of a sudden it has a rally. Silver looks around and says, oh, wait a minute. Whoa, wait for me. Silver then has a big rally. Then gold says, oh, okay, you want to rally? I'm just taking it easy. Gold then takes it easy and silver rallies. Then all of a sudden, they both look around and say, hey, this is great. And they both rally together. And then when they both rally together, that's when they're a little bit vulnerable to a pullback. I'll be back. Dow's down 233.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So look at this deep Riker cup or bowl and handle in AEM. In the monthly chart, it's taken out the 89.23 September high of 2020, right? It took out the high that was made back in December of 2010 of 77, round number high. These round numbers are amazing. Peak A, B, C, and right at D, it makes a round number 77 all-time high. All right, so what we're looking at here, between that and ASA, this is AEM, Agnico Eagle Mines, and we're looking at the monthly chart of ASA, that's the South African gold, it's like an ETF. ASA, Gold and Precious Metals, This has got, it's at 28.67 in the monthly chart. In F, 25.92 was the high that it took out. That was the high that I chose there in the measured move. And this says that within the next month or two, it should take out the 31.69. It could do it much quicker than that, 31.69 high. So I just wanted to show you that we're looking at gold doing well. So, in the silver area, it's doing the same thing. So we have CDE. I think it's getting a little toppy right here, but it's only in leg C. So we're in the 570s. It's trading right now 675. Really nice move. Look at this cup formation. It's done everything that we wanted. It got to the left side 680 level in a quicker time than I thought. 684 was the high. So it really depends on what you have, because there are some that have been lagging. So I just wanted to say that. Now, the one other thing I wanted to mention is that the VIX index right now is trading up a little bit, up $1.34, 21.86. It's going to take a lot to get it back over the 29.57 level that was the high of 2 weeks ago. So as I'm looking at this, we remain short. We've got a couple of trading positions. We've got some nice positions that are working in the bounce, but at the same time, we're looking at different price levels to get in long or any rally that you should hold. We want to see by Wednesday a really nice close to the upside. Otherwise, we just chop around again. Have a wonderful day. Stay tuned for Steve. I'll be back with Jacob later on.